The Street's Action Alerts Plus Charitable Trust tweaks some holdings after earnings reports from four stocks in the portfolio: Alphabet, Dow Chemical, Mondelez, and Occidental Petroleum. Jack Mohr, Director of Research, is here to run us through the action. Good to see you, Jack.
Good to see you.
Let's start with Alphabet. I still want to call it Google all the time, but it had a spectacular quarter. So did you guys add to your position either ahead of the report or after?
So we didn't add it. So unfortunately, due to our restrictions, anytime Jim mentions a stock on air, we can't trade it for 3 days. So Alphabet is one of those that gets mentioned almost every day.
Right.
Now we did upgrade it, and our price target was raised, a few weeks ahead of the quarter. But we were a little nervous ahead of the quarter because of the towering expectations. But this company blew it out of the ballpark. And they provided incremental disclosures where they broke out their two business segments, their other bets, which is kind of their VC, almost like long-term projects, and then their core Google search and YouTube and Gmail and that core product. That core product is generating an incredible amount. I think it was $7 billion in operating income just in that quarter alone. And I think analysts were looking for 6 or 5 or 4. And but also the other bet segment has, once they broke it out, it looks like there's some potential growth opportunities long term, and they're just 5 chess moves ahead of the competitors, and that's what I love about Alphabet.
And it looks like that's going to be in the portfolio for a long time to come.
I don't think we're going to touch it. If there's ever a sell-off and we aren't restricted and can buy it, we would buy it, because I think it's going to 850, 900 within the next year and a half.
So let's move on to Dow Chemical. It also beat estimates when it reported earnings. Sales, though, fell a little bit. So how did you view the results and then the stock?
Yeah, so we actually added to that position ahead of the results. The sentiment was very low. It had been trading as if it was an energy company. It's not. It has some exposure given its kind of the ag side of the business, agriculture side. But its revenue is expected to decline. Now, it declined less than anticipated, and it's proved that its earnings story is still very intact. It has an impending merger with DuPont, and that merger is going to create incredible synergies on the cost level. And I think it's becoming increasingly apparent that those synergies are going to be well above what the combined entity has previously estimated. So I think you combine that with a strong quarter, with a big buyback program, and I think that signals that management has confidence in shares, we have confidence in shares, but it has run up a lot. I mean, it's been one of the best performers, I think, since the report.
So it's a different story for Mondelez. I know Action Alert Plus trimmed some of your position there. What's going on here with the stock? Because you would think it would be performing well given its industry and given the market environment, but that's not really the case here.
No, I mean, it was performing kind of well, relatively well heading into the quarter. But the quarter was a disaster, and we made a tough decision. We listened to the call that morning. So the actual quarter was decent, but their guidance for 2016 on sales was awful. So we listened to the call, tried to see if there was any value in it, and then did some more analysis. And to be honest, we just don't see any. We realize that the story that they've been telling, which is that we can grow the top line and grow margins, is just not realistic. And so we slashed our position. It was difficult to slash when the stock was down 7%, proceeded to sell off 3% the following day. And I think that we've told subscribers we're going to trim on any incremental, maybe dead cat bounce, because we've lost confidence in management and lost confidence in the story, and that's just one that we had to own up to and cut our losses.
So would you exit it entirely if the opportunity comes up?
So I think that we would trim it a little bit more. The only thing that's holding it together, I think, is Nelson Peltz and some activist pressures that provide some level of support.
Yeah.
And if they can step in and they can really, drive the focus back to what needs to change in order for fundamentals to recover, the stock could find some support. So we're trying to hang it in there as a little bit of a hedge. I don't see it selling off entirely, another 5-10%, but that's the only catalyst that I can see.
All right, we have to talk about Occidental Petroleum because everyone wants to talk about energy. This is one of the few energy names that you like, and it's in the portfolio. You know, we've had this craziness with oil prices, a lot of volatility. So what's your current thinking on OxyPete right now?
Yeah, it's interesting. We slashed a lot of our oil exposure. Unfortunately, I mean, we did it starting in October and November, and we had to take losses on it. But since a lot of these stocks, all the stocks in oil have, you know, sold off 30, 40, 50%. Oxy's one is the final E&P, so it's directly tied to oil. It's in the exploration and production business that we have kept in the portfolio, albeit at a much smaller level. And it does have a strong story. It's the best in class, but it's a terrible industry. So it's the best house in an awful neighborhood, and so I think that they can maintain their dividend. It was clear by the call yesterday, and that's above 4% now. And ultimately, it's a long-term bet on if anybody is going to be able to come back from this and be resilient from the oil slide, it's going to be Occidental. So I think we keep our exposure there. But we also understand that the more the oil sells off, the more Oxy is going to sell off, and that's just the truth. And we can't de-link that stock from the oil trade.
All right, Jack Mohr, thanks for the update on all those stocks. Appreciate it.
Thanks a lot.
I'm Rhonda Schaffler for The Street.